Hello and welcome to the Safri Business Talks podcast. I'm Jamie Lane. I'm a partner at accountancy firm Safri and I work with a variety of owner-managed businesses across a range of different sectors. Join us each episode for in-depth discussions on the topical issues impacting businesses and their owners. We're here to help guide you through these areas and to provide practical tips for you to consider. And don't forget to please subscribe on your preferred podcast platform. So in today's episode, we're going to be diving into a topic that's often overlooked, but can have a huge impact on your bottom line. That's R&D tax credits. So whether you're a startup, a scale-up, or an established company, there could be real opportunities here to unlock value and also fuel innovation. To help us unpack this, I'm joined by Rachel Chappell, a director who's based in our Bristol office and a member of our specialist tax incentive team, which supports clients nationwide to identify and maximise opportunities to claim R&D tax credits. So together today, we'll explore why your business should be thinking seriously about R&D tax credits, especially in today's changing landscape. So thank you, Rachel, for joining me today. And to kick things off, let's start with the basics. R&D tax credits can sound a bit intimidating or even irrelevant to some businesses, but that may not be the case. So Rachel, can you give us a quick overview of what R&D actually means in this context and why the regime is important?
Okay, thanks, Jamie. R&D tax credits are a relief available to companies who are subject to UK corporation tax and who are undertaking qualifying research and development, or R&D activities, which I'll explain in more detail later. The benefit is a reduction in the corporation tax liability or a repayable tax credit, ultimately more cash in the business. And Jamie, as we all know, cash is king, particularly in such challenging economic times. The amount of relief per company will vary, as this depends upon the regime claimed under, the date the expenditure was incurred, the taxable profit or loss position of the company, and, more obviously, the level of qualifying expenditure. There have been lots of changes recently. However, to keep it simple for the moment, for accounting periods beginning on or after 1st of April 2024, the benefit is broadly up to 16.2% for every pound spent on qualifying R&D. So if a company spends £100,000 on qualifying R&D, it will save corporation tax or get a repayable credit of up to £16,200. A bit of background. The first UK R&D tax incentive regime was introduced by a Labour government under Chancellor Gordon Brown in 2000. The year 2000 seems much longer than 25 years ago to me. I don't know about you, Jamie. And to put this into context, also launched that year, but of less importance to the business world, was Big Brother and also Coldplay's first album, Parachutes. All are still going. There have been numerous changes to the R&D regime over the last 25 years, and I will cover a few of the key recent changes. Why you may be divided upon whether you want Big Brother and Coldplay to still be going in 25 years' time, we are hoping that the government will continue to support business throughout the next 25 years by supporting innovation in the UK and provide companies with a well overdue period of stability.
And why is the regime important?
It's really important, Jamie. It incentivises and rewards companies who invest in research and development, enabling such companies to invest more, whether by employing more staff or creating new innovation space. Although particularly important for startup companies who can use the repayable tax credit to invest and grow, it is really beneficial for companies of all sizes. The UK government continues to support the regime. There have been rumours that Labour may change the way it works, but I think it's probably fair to say that the government has much more pressing issues, and they appreciate that it's beneficial for the UK economy. More money given back or retained by companies leads to more growth and productivity, higher employment, better retention of staff, and other investment, which in turn puts money back into the economy and government coffers through taxes, all of which much needed. The regime also helps to put the UK on a level playing field with other countries which offer similar regimes, and in particular those countries which have lower rates of corporation tax. According to a recent OECD report, 33 out of 38 OECD countries offer tax relief for expenditure on R&D. Our government is keen for companies to locate or remain in the UK, and this is just one way to incentivise them to do just that. From the company's perspective, provided that they demonstrate qualifying projects and costs, it's essentially free cash. It is in some ways the other side of the coin to grant funding. Rather than making an application about R&D plan to be undertaken and hoping the government will fund it, R&D tax relief rewards R&D already undertaken. It does not change the way a claimant company operates. It continues with its development activities as normal. The R&D tax relief regime results in these activities costing less for the company.
Thanks, Rachel. It's a real clear explanation. It's helpful to break down as well the rewards of R&D tax relief. So now we've got a solid understanding of why a claimant wants to claim R&D tax relief, let's just talk about who it's actually for. Because I think a lot of businesses may struggle between the layperson's more commercial definition of R&D and then the specific tax definition which claimants need to meet. What kind of businesses might be missing out without even realising it or acknowledging that HMRC has concerns about fraud and error? Which businesses might be appreciative of knowing that this relief is not intended for them?
Yeah, as I mentioned, it's a relief for companies who are within the corporation tax regime. A company can benefit regardless of its size or whether it has taxable profits or is loss-making. To give you some context, HMRC annual R&D statistics published in September 24 set out that there were circa 66,000 claims for R&D tax relief in the year April 22 to March 23. Qualifying R&D expenditure was estimated to be about £47 billion, which resulted in total R&D tax relief of circa £7.5 billion. So we're really hopeful that your company might also be able to benefit. While it's probably no surprise that industry sectors such as manufacturing, IT, science, including pharmaceutical, beauty and skincare, account for the vast majority of claims, HMRC receives claims for sectors as diverse as agriculture, forestry, mining, energy, construction, transport, food science, finance, defence, and many more. Interestingly, many companies also make claims for software development when this is not their key business stream. They may need to develop bespoke software to support their actual business. Although not all companies will meet the necessary criteria to qualify, we are keen to ensure that all companies that do qualify obtain benefit from this generous relief. If unsure, we recommend you spend your time considering whether your company would qualify. Have you improved products or processes? Have you invested in innovation? For HMRC, the key criteria to be met are: 1, there must be a project. 2, the project must be seeking an advance in science or technology. Now, this is not an advance in the company's own knowledge, but wider knowledge in that field, advancing knowledge in the public domain. Perhaps think about it as groundbreaking. This is interesting because many people believe that what they do is just their day job and don't appreciate the innovation. On the other hand, others think that everything is R&D. So what does this mean? Well, a competent professional working in the same field would need to assess that the project does indeed seek an advance beyond the known state of art and best practice. The third criteria is that the project needs to try to overcome scientific or technological uncertainty to achieve the advance. The work cannot be readily deducible by a competent professional working in the same field. So it's not something which will be resolved in a short meeting. It's likely to take several weeks or months. You would expect activities such as trial and error, setbacks, prototyping, and feasibility studies, activities which show there's a journey resolving uncertainty.
Thanks, Rachel, for setting out the key criteria. Would it help perhaps just to put it into context in terms of a brief example of how it could be applied in real terms?
So company X is at point A but wants to get to point B. Point B might be an innovative or improved product or process. Company X might not know whether B is possible, as there is no readily available public knowledge about B, and it's probably not been done before. Alternatively, company Y may have already achieved point B, so company X knows it's possible. However, it can't replicate the product process as it's protected by a patent, which we'll come back to later. So company X has to find an innovative way to achieve point B. Finally, perhaps once company X has achieved point B, it then wants to improve it, make it more economically viable or more environmentally friendly or efficient. And so it develops point C. In all cases, providing that there is no information in the public domain that sets out how to achieve point P or C, there is likely to be qualifying R&D. A key point to remember is that the project does not need to be successful. Although I appreciate this isn't great for the company, if the project fails, such a project may indeed qualify for R&D tax relief. Ironically, the fact that the project was aborted may support the fact that there was qualifying R&D. We act for a wide range of companies, from startup to large international companies, and in all sectors. I think the key message is that don't discard R&D tax relief without considering it. At Safri, we are more than happy to offer a free call to explore at a high level whether we believe that your company could become one of those 66,000 companies already benefiting. We can also discuss another key point in the call, that the expenditure must be revenue in nature for tax purposes, i.e. have no lasting benefit for the company. Such expenditure can be written off to the profit and loss account or capitalised as intangible fixed assets. In summary, expenditure which does qualify includes staff costs, consumables, externally provided workers, probably better known as the agency workers, subcontractors, software and cloud computing.
Thanks, Rachel, for setting that out. Clearly, there's a lot more businesses that could be benefited from R&D tax relief than you might assume. But of course, there's been a lot of press recently around how the regime has changed and how HMRC has perhaps taken a little bit of a different view on R&D, and the landscape continues to change. Perhaps you'd just be able to set out, what the recent changes for R&D tax relief and how they might impact claimants.
Yeah, so let's start with HMRC approach. So like you said, from media coverage, many people will be aware that HMRC have been opening more inquiries into R&D tax relief. They're really keen to ensure that the relief reaches those companies who are undertaking qualifying R&D, but are aware that there have been significant levels of fraud. I think at times HMRC set out that they thought only about circa 50% of claims were compliant, some of which were wholly non-compliant and some were partially non-compliant. So there might have been R&D, but not all projects or costs were qualifying. Now, initially, HMRC took to the relief with a sledgehammer approach, sending out lots of inquiry letters, which were saying to the company, we believe there's no R&D, up to you to explain why there is. Now, these letters, as you can imagine, were very long and arduous to respond to. Essentially, HMRC was saying, you are guilty and you have to prove your innocence, which isn't quite the innocent until proven guilty we're used to. More headlines were made when Green Jellyfish and R&D Boutique were raided by HMRC due to making fraudulent claims. However, you'll be pleased to know that the approach has changed, primarily because several taxpayers have taken HMRC to tribunal and won. Through the Chartered Institute of Taxation, advisors also went back to HMRC to set out that their sledgehammer approach was not acceptable. So HMRC are still opening inquiries, but in a much more targeted manner. So what does this mean for companies? Please don't be put off from claiming, but your claim may be subject to more scrutiny. R&D tax relief is still a really valuable relief and is relevant for all sizes of businesses in all sectors. And it's really important to remember that not all firms or boutiques are trying to defraud HMRC. Most, like Safri, wish to ensure that any claim is robust and justifiable, while maximising the benefit to our clients.
It's interesting, isn't it? Because it's definitely moving on quite quickly, probably over the last couple of years, in fact, in terms of how HMRC are perhaps changing tack. And it's really relevant that the CIOT have helped to challenge HMRC's approach to it as well and make sure that they are taking a fair approach, because as you said there, it's definitely felt like they did take a sledgehammer approach to dealing with lots of different inquiries and wrapped a lot of companies up in inquiries that perhaps were a little bit OTT at the time.
Absolutely. And I think we've also seen some of the letters we're receiving are on just much more specific areas of a claim. Yeah. So they might be saying, we agree the projects qualify, but it might be that, for example, we challenge the consumables included, which makes it much more fairer to the taxpayer, much more easy for not only the taxpayer, but their advisors to respond to HMRC and justify the claim.
Yeah, so rather than saying there's no R&D, which is what you were just saying a moment ago, they are being much more targeted, and therefore the period for these claim investigations or challenges, I imagine they could take a year to resolve. Is that the sort of process?
Yes, I think in some cases a year would be a really positive outcome.
Right.
We've had some inquiries that have been ongoing for several years. HMRC often say they want us to respond probably within a month, but then they take a long time to reply, purely I think because of the volume of inquiries that are ongoing. I think once they've opened an inquiry, they might open an inquiry into a previous period. And so the time an inquiry can take to resolve can seem to be sort of never ending in certain cases.
Yeah. And so having an advisor that makes sure that claim is as robust as possible and provides them with sufficient information to, if they do pick it up and do have a good look through it, is more critical than ever.
Yes, I think so. I think when we submit a claim, our review process is essentially we carry out a review as we would expect HMRC to carry out a review. Everyone nowadays can use Google to look into sort of what is deemed to be the advance. I'm not saying obviously we don't know as much as the competent professional, but HMRC will do that as well. So yeah, our approach is to make sure that it will withstand HMRC scrutiny.
Yeah. And timing is more important now. So talk us through the timetable for trying to make claims.
Absolutely. As when you're playing a sport or sort of leading a comedy show, timing is crucial. And there are key dates that a company has to think about when considering making a claim for R&D tax relief. The main one is that a company has 2 years from the end of the accounting period to file a claim for R&D tax relief. So, for example, a company with a 30th of September 23 year end has until 30th of September 25 to file a claim for R&D tax relief. However, for accounting periods beginning on or after 1st of April 23, there may be an additional requirement to submit an advance notification form no later than 6 months after the accounting period. So it's essential that companies consider whether a claim may be viable, either during the accounting period or very soon after. If the company has never made a claim or not made a claim within the last 3 years, advance notification form will definitely be required. If a claim has been made, it will depend upon when it was made and will be subject to some transitional rules. The form is very simple to submit, but it must be noted that HMRC are well within their right to refuse any claim if the advance notification form was required but wasn't submitted.
Okay, so things are definitely changing. I want to just go back to something you mentioned earlier, because I think there's a close interaction here, and that is patent box relief. Go through with us what that is and how it might interact with the R&D tax regime.
Yeah, so the patent box regime was introduced in 2013, again, aiming to encourage companies to sort of develop intellectual property in the UK. And to date, I would say it's a really underutilised tax relief. However, the main rate of corporation tax now 25%. It's really worth considering whether companies can benefit, because taxable profits arising from patented technology are taxed at the reduced rate of 10%. So essentially, you're saving 60% because you're paying 10% rather than 25%. There is no repayable credit for the patent box regime, and nor is it beneficial for loss-making companies. So how do you qualify? A company needs to own or hold an exclusive license over a qualifying patent. So the patent needs to be granted by the Intellectual Property Office in the UK, the European Patent Office, or certain European jurisdiction. The company also needs to have done some of the development work relating to the patent. So if the company sells a product containing a patented product, that income stream resulting taxable profits may be subject to corporation tax at 10%. Now, really beneficially, it only needs to contain one component, which is patented. So say, for example, the company sells a car and the car has a patented headlight, then all worldwide profits coming from the sale of that car will be within the patent box regime. As you can imagine, this is subject to some other calculations and tax adjustments. Nothing's ever simple in the world of tax, but given the rate of tax is 25%, 10% tax rate is really beneficial. You can also get sort of money received from infringement of a patent, or if somebody's paying you a royalty to use the patent, profits from that can also come within the patent box regime. You mentioned how it interacts with R&D tax relief. Obviously, a lot of companies will have claimed R&D tax relief on the work to obtain the patent, but then through the calculations, the more you spend on R&D relating to that patent stream, the better it is, because it increases the patent box profits, and the more profits that go into that stream, the better the tax relief. Just to pick up on timing, a company has 2 years from the end of the accounting period to elect into the patent box regime. But interestingly, I just wanted to mention for companies who might be applying for a patent, obviously there's quite a time lag between application and grant. So for example, a company might apply for a patent in 24. If during the first years the sort of income stream is loss making, they wouldn't elect into the patent box stream because it's not beneficial. Say for example, by 26 it was making profits, you would elect into the patent box, even though you wouldn't get the benefit until the patent was granted. So you might not get the benefit until 2030, depending on timing. But I'd say for any company who's applied for a patent, it's worth considering whether it would be beneficial to elect into the regime. And we undertake feasibility studies with companies to not only work out whether it's beneficial, but also to work out the best timing to elect into the regime.
Interesting. So it's a pretty underused tax opportunity that people listening to this podcast should really think about, especially if they've got patents already in place or that they're applying for patents at the moment.
Absolutely. I think it's quite surprising when you look at numbers how few companies actually claim under the patent box regime.
Yeah, agreed. And I suppose for people listening today and thinking about R&D and patent box, it's important really for them to think about the fact that they could be really developing long-term growth in their business, thinking about R&D and patent box as well, thinking about how they can invest in their business using these reliefs.
Yeah, absolutely. I think, like we said, obviously HMRC requires claims to be robust, but they're really beneficial reliefs. The additional cash generated can obviously help business retain their cash in order to sort of invest in new technologies, processes, and people. Thinking about, I suppose, longer term financial impact and strategy, they can help to sustain growth, attract and retain staff, provide sort of additional funding to sort of galvanize the business, whether startup or large corporate. And I think another interesting point is that the benefit of R&D tax relief is now shown above the line in the financial statements. So potential investors can also see how it's benefiting the companies, and this might attract, I suppose, more investment. Yeah, so definitely really important for overall business strategy.
Excellent. So, Rachel, it's been a really valuable conversation. And whilst I think you've done your best to make this as straightforward and easy for people to interpret, it's undoubtedly actually very complex. And so having the right advisors on board to help demystify R&D and patent boxes is really integral to making sure you get the most successful outcome for any claim. So can you just talk through how you and your team help support clients in making R&D and patent box claims?
Absolutely. We tend to have sort of an initial conversation with the client. Following on from that, and I suppose depending on the outcome of that conversation, we can undertake feasibility studies, both for R&D tax relief and patent box, where we work through almost like a cost benefit analysis to determine, obviously for R&D tax relief, whether projects qualify, and if they do, the sort of resulting benefit to the company, because what we don't want is companies spending a lot of time and then getting either no or little benefit. We can also think about sort of broader strategy, in particular because rules have changed regarding sort of overseas work, subcontractors. So we again can look at how companies can mitigate any impact. And then finally, we have an excellent relationship with HMRC, and we're known for submitting high quality claims. We have expertise in-house to make sure the claims are robust but maximised. And I think a really key thing is that we really tailor our work to sort of the company and the client. We can be as involved or less involved as the client wants us to be. We can either run the whole claim or we can review work done by the client. So we're really flexible, or we can manage the entire process. And I think ultimately we want the cash benefit to remain with the company. So we do fixed fee ultimately, so more benefit, more sort of benefit to the company. Finally, we have expertise in sort of all sectors, all company sizes. And I think as we provide sort of services, sort of apart from R&D tax relief and patent box, we can consider these reliefs in context with the wider business objectives of the company.
Fantastic. Well, Rachel, thank you so much for joining me today and helping to demystify these reliefs. Thank you very much. That's all for this episode of the Safri Business Talks podcast. At Safri, we provide a range of tax and advisory services to help businesses and their owners achieve their objectives. But if you'd like to find out more about the services we offer, or for more information and insights, then please do visit our website at safri.com. And don't forget to subscribe to your preferred podcast platform and leave us a review if you found this episode helpful. Thank you for listening, and see you next time.